What is up, my fellow prop firm traders? Welcome back to the Verified Trader Funding channel, where I cut through the noise and the hype and tell you the truth about these prop firms. Today we're breaking down a brand new player in the game, DayTraders prop firm. Now listen, some of their features have me raising an eyebrow in a good way, but not everything's sunshine and payouts. In this video, I'm giving you the raw pros and cons, walking you through their evaluations, payout rules, payout systems, and the red flags I spotted that most people will absolutely miss. This firm isn't for everybody, but for the right kind of trader, it could be a massive hidden gem. Let's get into it. There are some major pluses, guys, like 100% profit split forever, straight to funded accounts, low pricing, but there are also some major negatives like consistency rules, payout restrictions. That's why it's important you know everything so you can make the right decision. So Apex Trader Funding and this company have something in common. The founder of Apex Trader Funding is also the founder of DayTraders. He was the CTO of DayTraders. Quick backstory for full transparency. Last summer, before DayTraders was even launched, the founders actually reached out to me. They wanted some feedback, asked if I'd be down to help with strategy and maybe even help partner and promote once things were live. We sat down for about an hour. I gave them insights on what traders care about. We went into payouts, automatic systems, pretty much what you and I care about from a prop firm. But I ended up fumbling the emails, missed their emails, and we ended up losing touch. While I'm not directly partnered with them anymore, I am an affiliate with them today. I was part of the convo before this firm even hit the market. That's why I wanted to give you guys a full no BS review now. And if you don't know what a trader funding company is, aka prop firm, it is a company that's going to invest in your trading business. They're going to allow you to trade with their capital, which then in result will fast track your trading, hopefully to become a full-time trader. Now you may be like, is funding real? Like, is this legit? Because I had the same questions when I came up, like, this is too good to be true, right? It's not too good to be true. There is also a dark side to trader funding. It is very hard, and most people, including you guys watching this video, do not have the skill set to pass and get funded. These companies set very strict rules, and if you don't have a strategy and don't know what you're doing, you're unlikely to pass. With that being said, why should you listen to me? Well, I make 20 to 50K a month from trading funded accounts with prop firms. This year alone, I've already withdrawn over $250,000 from prop firms. And I've tried just about every prop firm out there. I know all their games, so I'm definitely able to give you the advice that you're seeking, which is this the right prop firm for you? All right, let's go over the pros and cons here because there's quite a few of them. All right, so we'll start with the pros here. So you have the zero split, right? So that means you're never having to split your profits with them. This is the only company I know of that does this right now. If you know one that does, and I don't know about it, please put them in the comments. All right, so fast 4 days to pass. I would say that's about average. Automated payouts, which I really like this. This is how Take Profit Trader does it. I think all companies should do this. Trailing drawdown can obviously be a downside, but they also offer static and end of day. So news trading is allowed. Dollar cost averaging is allowed. They offer static accounts. That's also plus. And then you have the Project X platform and Rhythmic. So the cons, guys. So you have limited withdrawals. Like, let's be straight up about it. Limiting your withdrawals in any kind of way, shape, form, or either any kind of way is bad. So total profit cap. So we'll get into each and every single one of these a little bit later. So 30% consistency squeeze, new firm risk, limited accounts, inactivity rule, no martingale. They don't offer trader rate connections, so you can't trade on TradingView. 50% consistency rule in the evaluations, and minimum profit per day in evaluations. So you can see the cons kind of outweigh the pros, but we'll get into each of these a little bit more in depth. Let's get into their accounts. They actually have 3 separate different accounts now. They just added straight to funded accounts. So you have your trailing drawdown here, which is very good, right? Because of the low prices, but the trailing drawdown is very tough for some. And then this is where they come in. Some companies don't offer this. They actually have static accounts and different account size static accounts. And then they have straight to funded accounts on Project X, which we'll get into the different platforms they offer a little bit later. This allows you to bypass the evaluations and go straight into an end of day drawdown with a built-in daily loss limit. So I don't think you guys should be going with straight to funded accounts unless you are already passing the trailing drawdown evaluations. So here is their website here. They actually updated their website. It's actually very nice now. So let's get in the different actual account size they offer, and then we'll get into the rules. So you have the 25K trailing account, 50K trailing account, and 75K trailing account. They actually have static accounts in different sizes. So like Apex offers a 100K static account, but it only has like $650 of drawdown, which is disgusting. But they actually have a 25K account here with a $750 drawdown. That isn't bad, right? That's not bad at all. So static just means that your stop loss never moves. So there are essentially 3 different types. There's end of day drawdown, which means it will trail you, your drawdown, but it will only trail you based off your balance at the end of the day. Then there's trailing drawdown, which is intraday trailing drawdown, which will trail you at all times in your account, whether you take profits or not. And then there's static, right? And then the straight to funded accounts, they have the 25K, 50K, and 150K. So obviously more pricey, but you don't have the fee, right? So if you go to the trailing here, you have a price of $224, and then you have the activation fee, right? Straight to funded account, you're paying almost about $90 extra there. So they do also offer bigger accounts as well. So if you go to the trailing accounts here, it goes all the way up to a 300K, and then also on the static accounts as well. And then the straight to funded accounts only goes up to 150K. We'll get into which accounts you guys should be choosing, but there is a trap here that you guys really got to understand. But we'll get into that in a little bit later in the video. Let's get into the evaluation rules. So you have to trade for 4 trading days. You have a consistency rule, meaning you can only make 50% of the profit target. So let's say in a 50K account, you're required to make $3,000, right? So you can't make more than $1,500. You have a minimum daily profit that you have to make for it to count as a trading day, and you need to close your trades by 4:59 p.m. EST. So some of you may be wondering what's this mean? Daily simulated profit. So what they're going to do, and what most prop firms are doing now, is they put you in a simulated, aka it's a demo environment that you still get paid from, right? So in your funded account, it is a demo, but you'll still get paid. And then once you hit a certain amount of profit, they'll move you into a live funded account. So they have a path to a real live funded account. There really is much benefit to it, which we'll go over that here in a little bit. Okay, let's look at their funded account rules. So the first thing to know is that once you pass, you do have a one-time fee. That's an activation fee. You're only allowed 5 active pro accounts at a time. You can have 3 active straight to funded accounts per household. And then combined, you can have 2 straight to funded accounts plus 3 pro accounts. Either or, you can have a total of 5, but a 3 max in each. So the straight to funded accounts do have different rules than the funded accounts. So we're just going to go over both of the rules here. Some are the same, some are, I'll touch on both of them here. So dollar cost averaging is allowed in both evaluation and pro and straight to funded accounts. News trading is allowed, but is not recommended. With their consistency rules, you really can't do it. No hedging. Pretty much every prop firm implements in this. No high frequency trading. This accounts for like thousands of trades. All right. So probably my least favorite rule that they have here is this right here, guys. Pro accounts, no single trading day may exceed 30% of your total profits. And then straight to funded accounts, this is bad, guys. 20%. I don't know. With other companies like Take Profit Trader, I don't know why in the world you would choose these guys with the 20%. The 30%, with their pricing, it's equivalent to bull knocks, so I get it. But the 20%, absolutely not. So minimum trading days, it requires at least 8 trading days until you can get a payout. And then straight to funded account requires at least 10 qualifying trading days. Inactivity rule. So another downside, if no trades are placed within 30 days, your account will be deactivated. Minimum trading profit per day. A 50K is 200, and then it goes up to 300K is 400. In the beginning of the video, I told you guys about a trap that they set for you guys. Let's take a break from that kind of dry stuff here and talk about the trap that these prop firms are setting for you guys. Took me a while to realize this, but once it did, it truly changed my whole mindset about prop firms. Okay, so choosing the right account size and playing the game with these guys. So if you're to ask any CEO, any prop firm employee, what account size should I choose? They always say the highest. And I always found this kind of suspicious because there's clear evidence that it's the direct opposite of what you want to do. So the first thing we need to do is stop looking at the account, quote unquote, size that they say it is. So the size of the account is based off your drawdown. You don't have a 25K account, you have a 1500 account because you have $1,500 of drawdown. You don't have a 50K account, you have a $2,500 account. A 100K account, you have a $3,500 account. So something interesting starts to happen when we start looking at this. And this is going to increase your edge against the prop firms. And you really got to think about how the prop firms have an edge over you. Because the prop firms are against you, they want you to fail. So I always like to start this mind-opening experiment here by asking a simple question. Are these two accounts the same? So on the left here, you have a profit target of 1,500 and you're allowed to lose 1,500. So this is equal, it's 1. It's 1 to 1 versus a profit target of 20,000 and a drawdown of 7,500. This is a 2.6 verse. You have to make 2.6 times as much as you're allowed to lose. So are these equal? Would you value these the same way? Which one would you choose? You would choose this one, right? Because every dollar you have to make past your drawdown amount is an edge that the prop firm's gaining over you. So to quantify this, I came up with something called profit to drawdown ratio, the greed trap. So I refer to as PT as profit target, the amount of money you must make to pass the evaluation. DD stands for drawdown, the amount of money you can lose before the count is blown, right? So here's where it gets interesting. So if you go PTD R minus R, profit to drawdown ratio. When figuring out the ratio between the drawdown and the profit target, you get the amount of edge the prop firm has over you depending on which account size you choose. This is where it gets interesting, guys. So if we take away the stupid little like 25, 50K account names that they give it and we look at it as it really is, and we really have a $5,000 account when we're choosing a 150K account. We have to make 9,000 and we're only allowed to lose 5,000. So this has a PTTR of 1.8. They have a 1.8 times edge over you. A 50K account is a $2,500 account. You have to make $3,000 of profit and they give you $2,500 of drawdown. There's only a $500 difference between the profit and the drawdown ratio. In the 150K account, it's almost 2 times as much. It's $4,000 in between the two of them. So big jump there. And then you go to a 25K account, it's even 1 to 1. So I urge you guys to never go over a 50K account. 50K account, you can justify versed on the pricing and the extra drawdown you get for that times 2 of profit. But In all honesty, guys, the 25K account is the account that you should be starting out with, because they're hoping that you go with a large account and they're hoping you slap on 6 minis, right? I'm not going to get into the drastic over leverage that is, but if you take the current price of NASDAQ and times it by 20, so right now the current NASDAQ price is 22,739. And then we're going to times it by its tick value, which is $20. So each contract you're trading with a notional value of $454,000, guys. So if you have times 6, you're essentially trading a position of $2,728,000. And you wonder why you blow up, right? When you only have $5,000 of drawdown. And then we're just going to do something real here just so that you see the absurdity of even 2 contracts. It's absurd. I do trade that way, but it is absurd. It's extremely over risked. So that's 300. You're trading 363 times your drawdown with 2 minis. That's insane, guys. At a notional value. It's just they put it in a contract so you can't see the leverage, right? All right. And now let's go ahead and get back into the video. All the rules are the same between the pro and other accounts like static or intraday trailing drawdown. So straight to funded accounts have an end of day trailing drawdown, which only updates based off your highest balance at the end of each day. And they don't say here if it goes away. So at some point, does it go away? They're not saying that here. Hopefully that is the case. If it's not, beware, guys. That's something about trailing drawdown that I really like. The intraday trailing drawdown is it goes away after you hit the threshold. So max withdrawal per 50K account is $2,000. So pretty much to get a payout, you have to make $2,000 and then whatever profit you want to take out. But $2,000 is a buffer and it's always going to stay there unless you close the account manually. So in the straight to funded accounts, a little bit different. You're going to be working off a profit target. So you have a profit target of 3,500 and then you can request 2,000 of it, leaving $1,500 in the account. Kind of a trap there, honestly. They're trying to get you to whack that down to 1,500. So you're left with only 1,500 in there. I would definitely make sure you leave more than that in there. And then here's kind of I get it though. So the total withdrawal cap per trader is 150 across all accounts. See, they pretty tricky that with across all accounts, right? So upon reaching the 150K or 6 payouts, you would then be evaluated for performance and initiate to transition to a live funded account. So that's the funded account rules. Let's go to the live account rules. Capital. All right. I know that last part was a little bit dry, but it's information you guys really got to know. So let's talk about the path to live account. So you have 2 options here, but the basics of option 1 is going to be once you hit your 3rd payout milestone, you can choose to put your profits from your sim account that they're going to be closing out into a live account. And then DayTraders will match 1-to-1 up to 10K, 1K to 10K. So for example, if you threw in 3K, they would match that 3K and you would start a live account with $6,000. So this is where it gets a little bit confusing. So option A, payout allocation, free live account right here. You don't pay anything out of pocket, but you do use your profits, right? They match, you start with a live account, and then there's no fee, just using part of your earned payout. So option 2, do nothing. You can keep your entire payout, but you will get a live account. You won't get a live account unless you take this path. So path 2 is you buy the DT DayTraders live account for $1,000. If you don't want to allocate your profits from your payout, or if you already had a live account and blew it, you can buy into the DT live evaluation. That costs $1,000 on its own, and it comes with a sim challenge. With 15 days, a 6K profit target. If you pass, you're placed directly into a live account with 10K profit, or 10K in the account. So I don't know why they chose to go this route, but it seems kind of silly to me. So once you're in your live account, whether either path you choose, you start with a live balance, you get weekly payouts on Friday. Your profit split improves the more you make. It starts out with a 70-30, goes to 80-20 and a max 90-10. So in the sim account, right, guys, they're paying you 100% out of pocket, right? But then once you get on the funded account, you're actually paying them 30%. And then as that goes on, the max you would pay is 10%. They call it a buffer for the targets. It's really just a tiered incentive program. So there are some benefits in the live account. You'll have a risk manager, which is going to help you manage your risk. Your contract your size starts at 2 minis. You're going to review your trades with this risk manager every 2 weeks. And after 2 months, you can raise your risk limit if you're not, doing degenerate like stuff. If you hit the max loss though, that's it. The account closes. You don't get the profits that you took from it, right? So in your live funded account, you and your risk management are going to set a daily loss limit and a max loss limit. If you hit your max loss limit, the account's closed, you get nothing, right? The daily loss limit, it puts you on the bench. You then have to meet with your risk manager to start trading again. I think this is how like a real prop firm would operate. So they've essentially taken the trader funding model, and then when you get in the live account, it's really like more like the, real prop firm model. All right, so let's go into why I don't think this is that big of a deal. For most traders, this company is great. So I essentially think that there's 3 different subsections of traders. There are the traders that are still failing evaluations. They have not gotten to the passing evaluation stage yet. Then there's the traders that are past that are now passing evaluations but still blowing their funded accounts up. And then the last stage is the traders that are getting payouts. Now, these 3 different subsections of traders need to be trading different prop firms, right? Okay, so when we look at these 3 subsections of traders, if you're in camp 1 and you're still failing evaluations, nothing wrong with that. I spent a long time there. I got very comfortable with doing that. You essentially need to be trading the lowest cost evaluations that you can possibly find. You want to cut your teeth on them. You want to learn, I would say even the harder, the better, because it's essentially going to build you and form you into a badass trader. And same thing with once you start passing the funded accounts, you start getting funded. You start passing the evaluations, but you're blowing up the funded accounts. You still want the lowest possible cost of evaluations because you're still blowing up. Then once you start getting a few payouts from these lower cost companies like Olnox, DayTraders, Apex, these 3 companies all offer 90%. When you have a 90% discount, which you can use the code KING with DayTraders at any point and it will give you the best discount. That's what you want to do is when you have that extreme discount, go in there and buy some of them. What I used to do is I used to buy them in sets of 10 and I would limit myself to that 10 evaluations per month. That worked the best for me. And then once you get a payout or 2 from these lower cost funding companies with really kind of shitty payouts, then you want to be going into the companies that have the best payout structure. Because at that point, you've dealt with the shittier rules. You've beaten all the hard rules. So the rules really don't matter to you at this point. All that matters to me is the payout. Like, are they going to restrict me? Do I have consistency? Do I have to jump through a bunch of hoops to get my money? Right? And that's why I am so pro take profit trader. They've never denied anyone's payout because the way their payouts are set up, they can't do that. They have no consistency rules, payouts from day one, no caps. Like, guys, is a profitable trader, there's no better situation other than take profit trader. It's better than your own cash account because I can get my cash out of that account faster than I can out of a cash account. And there's no consistency rules. The only rules that I'm not allowed to do is I'm not allowed to news trade, which I shouldn't be doing anyways in my funded account. That's it. And I can't hold it over the weekends. I have to close it. That's it. There's no other rules, right? but you gotta pay your tuition. You gotta fail some evaluations. Everyone's gonna fail a grip of them. I've had some students come into my Discord as of late, and they're just like hitting it out the block right off the beginning. You know, third evaluation payout, and I'm like, damn. But I think it's just we're getting better at teaching them. So the companies that would be here would be like Apex, Bullnox, DayTraders, because they're going to give you the lowest price evaluations in the game. Out of those three, I would say Bullnox is probably the most trusted. Apex Trader Funding, as we all know, they they denied all those payouts, and it's also why the CEO, Leo Riot here, he's the one that built all the tech for Apex, and he actually left Apex Trader Funding because of those mass denied payouts. I'm not going to go into the things that we discussed, but pretty much the way he painted the picture is that it wasn't like some random rule change. It was a thing that they had to do, and he didn't want to be a part of it, so he left. And then Bullnox, I've never had anybody come to me and like they got denied unfairly. I've never seen that, but I've seen that a lot with Apex. I've had to pay out of my pocket. So speaking of that, I have a website here, verifiedfundingcompanies.com, where I update with the best discounts with the funding companies you can trust. So any funding company that is on my page here, I guarantee their payouts. So essentially think of you like using my link or my code, you're getting value from it because then you get guaranteed payouts, even if the company like refuses to pay you out. Like let's say they do something sketch and they won't pay you out. That's when I'll step in and be like, hey, I got you, bro. I did it with Apex when Apex all of a sudden denied all those payouts. I paid out several people that requested, from me. But if you don't use my code or my link, I can verify that information with the funding company. I've had people hit me up. Hey, I got my payout denied from Apex. And I'm like, okay. I go and look, and I'm like, no, you didn't use my code, man. You used Patrick's code or someone else's code. He's like, oh man, you're right. And then he didn't get his payout paid out. So be careful with Apex. I do warn that they, at times, because the way their prop firm's set up with the 20 accounts, they're at high risk at all times, really. So again, I think DayTraders is a decent option for newer traders, in these first two camps. But once you're established, guys, there's no real reason to go with a company like DayTraders. I think they're a great starter prop firm, just like Bullnox and Apex are. But once you're established, you need to be moving on to better funding companies like Take Profit Trader, DayTraders, that have payouts from day one, and really care about these high level traders and take care of them. If you guys want to trade with me live every single day, you can. I actually have a Discord where I stream live every single day, and you can learn from me in person. I teach a unique strategy. I have built up a great community there. You can join for free, and every Tuesday I spend an hour and a half every Tuesday with the free traders in the Discord. So every month I'm spending 6 hours just helping new traders at no cost. So you can join my Discord for free. The link is in the description. I expect to see you guys there on Tuesday. Peace out.